Okay, so let's get started with today's session. We're going to go over trading around stock halts. And this was another session that was recommended by people in our Discord group that just wanted a little bit more information on trading around these stock halts. So first, let's cover why do stocks halt. So basically, the purpose is to slow down the volatility and supposedly to protect investors. This was initially implemented in 2013 to prevent stocks from basically getting crushed down, 30, 40%, triggering stop losses and then creating panic selling. Then that triggers more stop losses and basically that downward snowball effect. And then, a lot of times the stock would go right back up to where it was trading before. So all of these investors would lose a ton of money only to watch the stock go right back up to where it was trading just prior to all that mess. So that's why it was created. This came straight from NASDAQ. They call it the pause threshold price. So it's going to sound a little technical, but I'll break it down for you. So basically what they say is if a security is subject to a trading pause, the pause threshold price field will contain the reference threshold price that deviates 10% from a print on the consolidated tape that is last sale eligible as compared to every print in that security on a rolling 5-minute basis. So to kind of break that down, basically what they're saying is that within a 5-minute time period, a rolling 5-minute time period, if there's ever a price that deviates 10% or more, then that's going to create a halt, okay, a volatility halt. There are different guidelines for different priced stocks. There are also different guidelines for different times of the day, and we'll go over a little bit of that as well. So stocks do not halt on a circuit breaker, pre-market or after hours. Okay. Also, over-the-counter stocks, pink sheets don't halt. Warrants won't halt unless there's certain circumstances. So oftentimes you'll see a stock where let's say it'll halt, 4 minutes before the closing bell. Well, as soon as that closing bell rings, that particular halted stock will resume. So, a lot of people say, well, hey, how do you know it's going to resume right at the bell? Well, because stocks don't halt. They don't halt for volatility after hours or pre-market. So as soon as that closing bell rings, boom. Even if it's only been halted for 45 seconds, it's going to resume as soon as that closing bell rings. So keep that in mind. So they allow more volatility for the first 15 minutes of trading when the opening bell rings and the last 30 minutes of trading before the closing bell, because they know that there can be a lot more volume and volatility during those times. So basically the normal rules start at 9:45 a.m. Eastern time and kind of end, the normal rules end at 30 minutes before the closing bell. So halts can be a total momentum killer. Some people really like them. Some people really dislike them. Some people trade around them. Some people won't touch them. There are a few halts type. We're going to go over an example here in just a minute. But there's a couple of halts that you want to be very wary of. Okay, so let's say that a stock is running up on no news. You can't find any news. You don't know why it's running. It's a low float stock, and maybe you're thinking that it's just getting pumped. Well, there are times that the company will request what's called a T1 halt, which just means it's halted for pending news. Okay, so that they can formally announce that there's no news to account for the increased price action in their stock. Sometimes traders think, oh, well, when they see something popping up, they think, oh, well, somebody knows something, right? But then when the company formally says, hey, there's nothing going on, then when that stock resumes, it could resume, it could gap down, okay? Because some of those traders might think that there's, somebody knows something, So you want to be careful of getting caught in that type of halt, okay? And that happens often, where the company will come out, because if they don't, let's say that the company doesn't request a T1 stock halt, then the exchange itself can halt the stock, and that's a T12 halt. They'll halt a stock, which basically makes the company come to the exchange and let them know what's going on. Again, not a good halt to be stuck in, okay? Another halt that I personally don't like to get stuck in is a third halt up, okay? So once a stock halts 3 times on the way up, a lot of times that third halt up is a kiss of death. So, but it really depends on what's going on. If it just got a really, really strong news catalyst, got an FDA approval or whatever the news catalyst was, then sometimes it can certainly keep on going up. But most traders kind of know to be pretty wary of that third halt up. So how do we how do we spot a halt before it happens, right? Just in case you might want to get in beforehand, or you want to get out before it halts. Well, first of all, you should obviously know that if you're trading a stock that's moving up or down very quickly, there's a risk of a halt, right? So what we're looking for, and I didn't have time to pull up an example, but you guys can do that on demand, or you can look, whatever platform you're using, if it has that feature where you can actually go and look at a halt and see what I'm talking about. So what you'll see is the candle will stop moving. Okay, if a stock's getting ready to halt up, well, it's really, that candle's going to be ripping up, right? Well, that candle will stop moving. Okay, and then on your level 2 or ladder, whatever you're looking at, and your time in sales, you'll see that the buy orders are getting bigger. Okay, and they start stacking up. So if you see that maybe level 2 had number 40 on it, and then all of a sudden the candle stops and now level 2 shows 240, well, that stock's probably going to halt. Okay, so that's what we're looking for. So at that very moment when you see that candle start moving, you have a very, very short time window. I mean, we're talking seconds to hit the eject button if you want to get out, or to try and load up and try and get in. So the reason those orders on a halt up, so let's say it's the first halt up, okay, that it's going to halt for the first time up. Oftentimes, when a stock's ripping up and it's going to halt up, well, obviously there's a lot of buyers there, right? There's a lot more buyers than sellers. So a lot of people, a lot of traders, investors, they want to hop into that stock just before the first halt up, because oftentimes after that first halt up happens, when it resumes, it gaps up. And this is when they typically will sell. They'll sell on that gap up, or they'll at least scale out, take some profit on that initial gap up. And we're going to talk about filling that gap here shortly. So basically, why are those orders getting bigger, right? Well, investors are trying to grab shares just prior to the halt, betting on the fact that it's going to gap up when it resumes for an immediate profit, okay? Same thing happens for a halt down. Sell orders will start to get bigger, and you'll see sales going through time in sales, but the candle on the chart is no longer moving. Okay, so basically, as soon as you see that candle stop moving, that's why a lot of people say, such and such just halted because the candle stopped moving, when a lot of times it just kind of, for whatever reason, the candle stopped moving, but it didn't halt. Okay, so that's a real good way to identify when a stock's going to halt. And like I said, you have seconds, and there's no guarantee that you're going to be able to exit out or grab shares to get in. There's so much chaos going on. The exchanges are having a hard time filling orders, right? So, but you do have a small window there to try and do either one. So what's happening when a stock is halting up multiple times, right? And the halts we're talking about today is what you see on the screen there. We're talking about the halt code, LUDP. Some people call it limit up, limit down, which is LULD. but the actual code is LUDP, which is just a volatility trading pause. So what's going on with when stocks are halting up multiple times? Well, one could be some kind of big catalyst, some kind of news. A stock could be moving on no news, but traders think, hey, someone knows something, right? Maybe there's a rumor flying around out there, and we've seen that many times. Could be just a stock that's getting pumped, and it's just a momentum trade, and people are wanting to FOMO in. They think they're going to miss out on this huge move, so they're FOMOing in. So after a stock is halted up several times, this is something really to keep in mind. After it's halted up several times, typically the first sign of a pullback will oftentimes incite panic, okay? Because people will start freaking out that it's getting ready to tank back down. And that can set off a selling frenzy, okay? And that will often occur, and it'll halt to the downside. Okay, this is another bad scenario because once it halts down for the first time after some halts up, oftentimes, just like when it halts up for the first time, oftentimes it gaps up when it resumes. Well, the flip side is true as well. Oftentimes, when it halts down for the first time, it gaps down when it resumes, and we're going to see an example of that here in a minute. You don't want to be stuck in the first downside halt after several up halts. That's a bad one to get stuck in. So keep that in mind. So let's talk about a couple of strategies, and we'll go over some on the charts here in a second. So you always want to keep in mind the level that it halts at, because typically on your first or second halt, because a lot of times that level can prove key later on after it resumes. Oftentimes we'll see a bounce at that same halt level once the stock resumes, and even much later than that. That can prove to be a key level. So another strat is the gap fill strat on an up halt. So I'm going to show you guys an example of what I'm talking about here. So here, this is NEGG, is the ticker that we're going to look at here today. And this was on, I think, July the 7th of last year when it ran to, I think, 70-something bucks. So let's take a look at, let's go over this here real quick before we look at that. So this is the website that you can find. Let me get my drawing tool here. This website right here, and I'm in white, of course. Let me change this to black real quick. My colors here. Okay, so I need to turn it on, and I'm online. Sorry, my drawing tool always gives me a hard time. It's probably me. But anyway, this website right here is where you can find a lot of that information. You can look at, it's basically frequently asked questions, but it has some good info. You got some, here's one of the NASDAQ tables where you can see what the limitations are based on, I'm not going to go over all of that. Y'all can go to that website and check it out. Here is another table. And see, once again, from 9:30 to 9:35, you have this particular. From 9:35 to 4, you have this. So there's a lot of different factors involved. And some people have that memorized, and they say, hey, I can tell you exactly when this particular stock's going to halt because it fits under this particular tier with NASDAQ. And that tier says that once it goes up 10% in 5 minutes, then it's going to halt. So some people, have that memorized, and you're certainly welcome to do that. Just visit that website down there, and you can get all of those parameters. So we're going to go over NEGG. Here are the trading halts for July 7th of last year, and that's something that you can do. You can go to this website right here, this NASDAQtrader.com. That's a Big long nasty URL, but that's what it is. And you can actually you can keep that up if you like. If you don't have a halt scanner, you can keep that up. It's just web based, and I think it automatically refreshes if I'm not mistaken. And it'll tell you when when a stock halts, and it'll tell you when it resumes. So and you can also look up, like I did here, you can look up the history on if you want to see, hey, the last time a particular stock halted on a volatility circuit breaker halt, you can look that up. So there's a website for that. But anyway, here are all the halts. If you guys want to kind of follow along, we're going to mainly talk about just one halt because it was a pretty significant halt. But on July 7th, this is how many times on the LUDP, the volatility halt, that NEGG halted on that particular day. So let's look at the first screenshot here. Get on my correct drawn tool. There we go. All right. Okay. So basically, we're going to talk about this particular halt here. Come on. I'm going to be back on white. So this is, we're going to talk about this halt right here. So this is where it halted. Okay. I guess you could actually say here, but anyway. So this is the halt right here. This is where it resumed. Okay. Well, obviously, we know that the bottom body of a green candle is where it opened, right? So it halted here at, I don't know, what's that, 59 bucks, and resumed at like 61, something like that. So what are we looking for here on that? Well, we're looking for this gap to get filled, right? So when it opened back up there, this is one of those strategies that we were talking about. Okay, 1 second here. Okay, so that's the gap that that we were looking to get filled, and that's one of those strategies that I was talking about, where it's that gap fill strategy, right? So what can happen is after this particular halt happens, you'll have buyers will put in an order. I don't know exactly what level that is. Let's just say it's 58 bucks. So you have buyers that halted at 58, we'll say. So you have buyers that were not able to get in prior to the halt if they wanted to, that they'll put a buy order in at that $15, hoping for it to come back down, fill that gap, pick them up for the ride back up. So that's one of those, that's that up halt gap strategy there. And even if it doesn't happen right away, they'll still be looking to possibly hop in. Let's say it didn't come down and fill the gap here, popped up first, and then came back down and filled the gap afterwards. So that's one of those strategies. Same thing on the gap down. So let's look at that gap down here real quick. So like I said before, you don't want to be caught in the first halt down, because look what happened. So we halted down here, right? Gotta turn that off. So we halted down here, right? And we didn't resume until here. Or that's basically where we resumed. That's nasty, right? So basically, I don't know what we're looking at here. Let's call that 62 bucks, and then resumed around 54 bucks. That's pretty scary. So that's why you want to be very, very wary of getting caught in that first halt down after big moves up. So once again, we have another strategy here. So we have this gap fill strategy, right? So, but this time on the downside. So we have a gap here at this point from here to here that needs to be filled. So keep in mind, after it's up that high, sometimes, most traders are looking to fill that first big down gap, but they're going to take a look at what it's doing, okay, obviously, because depending on how far it comes down, the price action afterwards, this really took a long time before we actually started filling that gap. So you need to keep that in mind. You need to keep in mind. So if this thing, I guess my point is if after this first halt down, let's say that didn't happen, we halted down a couple of more times. Are we going to fill that first halt down gap? Well, maybe, maybe not, okay? But I would be looking more at the lower or the lowest halt down gap to be filled, because that price is coming way down for a reason, obviously. So make sure and keep that in mind. But this one wouldn't be too bad because it was, looks like there was only one halt down right there. So maybe that gap will get filled, and it actually ended up getting filled. So let's take a look here. So it started getting filled here. We're going to get to the next screen. Okay, so here we are on that halt down here. Make sure we switched over. Yeah. So here we are on that halt down right here. And we actually, this gap was here. Draw that gap again one more time. So we have that gap here. And we got filled. It took a long time, right? So this all happened. Keep in mind, I'm in Central Time, so this is an hour behind market time. So we'll say, 10:40 in the morning is when that gap was created. We filled a little bit of it here, but we didn't fill the rest of it until really a couple hours later, right? 2 hours and 20 minutes later. But it finally did get filled here. So that's another strategy that you can look for on those halts, is filling those gaps. Stocks like to fill gaps, right? Okay, so let's that go here, and so let's see what it did just for the rest of the day here. So for the rest of the day, it ended up, after it filled that gap here, it ended up pulling back some, then went all the way back up and made a new high of the day at 79 bucks. So pretty crazy move, but I wanted to show you guys this particular ticker because I remembered this move, and I wanted to check that move out and see if it kind of followed most of the rules, and it did. So, but this is typically what you can expect. Some stocks are going to do different things. Obviously, some are not going to fill the gap. Some are just going to keep on screaming up and don't care about coming back and filling those gaps. But it's always a concern. You always want to be concerned with a stock wanting to fill those gaps after a halt up or even a halt down. Okay, and this is what it did for the rest of the day. After it hit that 79.07 high, it kind of came on down, popped a little bit after hours, and that's that. So, as we know, stocks like to fill those gaps, basically. And, we talked a little bit about, knowing that there's a good chance after a first halt up that the stock could gap up when it resumes. So, we talked about trying to hop in when you see that first halt coming, and we talked about what to look for to know that halt is likely coming. When that candle stops moving, yet sales are still going through, and that's why you're seeing that flood of orders coming in. Buyers are trying to get in there to make that easy, or what they think is going to be easy money once it resumes on the gap up. So that's basically all I have for this session today. I'm going to stop the recording and we'll answer some questions.